You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The futures markets can be downright scary. Limit up, limit down. What the heck is RBOB anyway? Are they going to dump a truckload of soybeans on your front lawn if you click the wrong button? Come to think of it, maybe you should just stick to your comfort zone. Or you can break out of it with the Futures Rundown. The Futures Rundown is here to help you make sense of these scary markets. We'll analyze all the top futures trading activity, explore the ins and outs of your favorite products, explain exactly how futures work, and hear from leading experts in the futures markets. We'll even tackle all of your wildest futures trading questions. If it involves futures, then you'll hear about it on the Futures Rundown. The Futures Rundown is brought to you by T4 Futures and Options. Elevate your trading experience with the T4 Futures and Options trading platform. Whether you prefer desktop or mobile applications, T4 delivers low latency and professional grade functionality for both traders and brokers. Take advantage of theoretical sheets, strategy solver, MBO, advanced charts, and a suite of powerful features to enhance your trading strategy. Visit ctsfutures.com or search for T4 Futures and Options on Google to register and get a free month. And now, it's time to break into the futures markets. It's time for the Futures Rundown.
All right, everybody. That music means we are back once again on the Futures Rundown, back at our usual bat time and bat channel. My name, of course, Mark Longo from theoptionsinsider.com. Currently in the middle of a triple header hitting the network out there today. Kicked it off this morning with, of course, the old Options Boot Camp, and finishing up later on after this show with an awesome pro Q&A with our good buddy, Mr. Dr. VIX, a.k.a. Russell Rhodes, tackling all your questions about all things VIX, including some VIX futures. Going to get in there. So if you want to participate on that, check out all the live streams going on during the day. Participate in the awesome giveaway contest. Get options oddities at the end of the week and a whole bunch more. Only one place to go, theoptionsinsider.com/pro to kick the tires and light the fires. Welcome to all the folks who have joined us here in the new year. It's a fun time over there on the Pro. As you see who's joining us for a fun time here on the Futures Rundown this week, I am pleased to welcome back a returning guest, Mr. Brett Friedman, the managing partner at Winhall Risk Analytics. He also contributes some content over there at OptionMetrics. Brett, welcome back to the Futures Rundown for the first time in the mad new year of 2025, sir.
Thank you. I'm pleased to be back. Thank you for having me.
All right, then, with the gang assembled, let's dive right on into the trading pit.
It's time to break down all the action that's lighting up the futures markets this week. What's limit up and what's crashing and burning? Let's find out. It's time to enter the trading pit.
All right, everybody, welcome to the Trading Pit, the portion of the show we break down what's lighting up our tapes out there in the futures market this week. And we're going to get there in a second, but as I just mentioned, this is Brett's first appearance in this mad new year. That is so far living up to that moniker here in 2025. So let's start, Brett, looking back a little bit at the equally, if not more wild year that was 2024, a lot of things going on last year from a futures perspective. As you look back on 2024 in the world of futures, what really stands out and resonates to you, sir?
Indexes like the GSCI and BCOM, they weren't particularly impressive, mostly dominated by energy. But if you dive deeper into it, you realize that there are certain events that took place in the agricultural commodities and the softs that really dominated the commodity news last year. But not only did it dominate the commodity news, but I think the action in these certain commodities and the agriculturals and the softs also influenced people's conceptions of inflation and economic well-being and might very well have affected the election in November. For example, you've got things that people buy in the supermarket, most notably coffee, cocoa, orange juice, butter, poultry, things like that were significantly higher last year. I think we'll probably get into it later, but especially coffee and cocoa and orange juice were extremely higher last year. Cocoa's up, I think, about 145% year over year. And orange juice, similar type of numbers. We have several commodities, especially in the softs, making new all-time highs on a fairly regular basis. And I think that, in my mind, those were the most impressive things I saw last year in commodities. We also saw a rebound in natural gas, albeit it's starting to give away over the last couple of days. So that's, I think, the most significant event of last year, again, was in the softs, definitely.
All right, let's see what's lighting up our tape out here this week, listeners. And let's start to the upside. Let's see what's lighting up our tapes green here this week. Number 5, listeners, keeping it with the theme that Brett just mentioned of, let's say, consumable goods. How about a little bit of dairy? I'm lactose intolerant, so not exactly my bag, but for all of you out there who love a little class 3 milk, it's having a good week, up 5.58% out there in the March contract this week. Coming in at number 4, right above it. Also, once you process it, it's certainly a consumable good. It's lean hog. The April contract up 5.79% this week. Number 3, keeping it in the realm of consumables. We're going out to what Brett was just talking about, which is coffee. Another banger, dare I say it, a robust week for coffee. The March contract up 6.9%. Number 2, another thing you could consume, whether you put it in your coffee or whether it's in pretty much every processed product we consume these days. It is sugar, in particular the number 11 variety, going out to March, up 7.05%. In fact, we have a tie for number 1, and also everything on our list this week, at least to the upside, falls into that consumable category because tied for number 1, also up 7.05% this week. Our old pal cash settled cheese, so dairy kind of bookending our top 5 this week. The Feb contract cash settled cheese up 7.05%. So Brett, a wild week in the consumable category. Dairy, lean hogs, coffee, sugar, all dominating our list, sir. What's catching your eye amongst those? I know you've been watching coffee quite a bit. Are you a big dairy guy?
I am not lactose intolerant, so yes, I'm kind of a dairy guy.
All right, good. You can hold court on it for the rest of us.
But one thing you did not mention, however, which really people notice, is eggs. Eggs year over year are up over 200%. Weekly, they're up a little under 8% plus. If you go to the supermarket and buy a carton of eggs, you're talking over $5 usually, whereas a year ago they were $3.50 or something like that, or $3. Again, these are things that people notice. And, if you put it in your mouth, you tend to notice it, or if you buy it at the supermarket. And we'll get into it, I think, later, but this really affects people's inflationary expectations, right or wrong.
Well, that would certainly fall in the consumables category. Kind of a little more difficult to track on the futures end, but yeah, people feel that pain at the end. They feel that pain in a couple of places. They feel it in eggs. They can feel it, of course, in dairy if they're buying that in the store. And, of course, they feel it at the pump. Which brings us to our bottom 5, our dark side movers out here for this week, listeners. We'll kick it off in a product that probably doesn't have a lot of upside to give up. I mean, it had a good year last year, don't get me wrong, but one of the narratives besetting it for the better part of the last few months is this product really underperforming its peers in the crypto category. What am I talking about? It's Ether, the big Ether futures over there at CME, the Jan contract, giving up 4.2% this week. Again, if you're an Ether bull, that is not welcome news, not just because it's moving to the downside, but also people have been complaining for a while that it's underperforming your Bitcoins, your Solanas, and other big crypto assets out there, and certainly giving up over 4% again this week. Probably not going to help that narrative. Number 4, going back to the consumables category, it is oats, the March contract off 4.43%. I do love that we have the futures show now, listeners, because for a long time we were talking about oats, the underlying, on our TWIFO program, but we couldn't really get into it. It was moving quite a bit, as it's moving again this week. Oats are actually a surprisingly volatile underlying, and yet, for whatever reason, the options market hasn't followed suit. On a decent week, maybe oats will do 5 contracts. So not a big option story, which is why it's fun to sink our teeth, pun intended, into oats on the futures rundown. Number 3 to the dark side, again falling into the consumable categories. Another rough week for rough rice, listeners. The March contract off 4.62%. Then we shift gears, moving into the bottom 2, giving up the ghost this week. Number 2, it is uranium. So September. So this is a longer dated contract as well. The September contract off 7.12% this week. This has been kind of an interesting narrative on the backs of everything AI getting crushed this week. We've also seen some of the demand pulling back for all of the energy. I mean, for a while there, Microsoft's buying nuclear reactors. Everyone was spinning up every legacy reactor they can get their hands on just to feed these AI data centers. That was spilling over into demand for related products like uranium. Now, of course, coming down the other side, maybe, of that cliff. Certainly a big downside move this week. But the number one downside move going to the energy realm, it is nat gas, as Brett alluded to earlier. The March contract off nearly 10.5%, 10.44%. If you listened to TWIFO last week, we were talking about what just a surprising seasonal boost we've seen out there in nat gas, given a good chunk of that back again this week. And we had, of course, bomb cyclone, your blast site, whatever you want to call it, the Arctic tundra weather over the last couple of weeks. That always helps nat gas, of course, coming off the other side of that now and just giving up the ghost aggressively, off nearly 11%, about 10.5% out there. Brett, anything catching your eye in our dark side bottom 5 this week, sir?
Well, interestingly, in natural gas, I mean, it's come off significantly since, for the last week or 2 weeks or so, just because of milder climate forecasts for the next couple of weeks. But it's significantly higher than it was last time at this year, when it was running roughly, 2.25, 2.20, something like that. So it is significantly higher than it was last year. Interestingly enough, with Natty, if you go into Europe, the TTF gas, which is sort of, the standard of gas futures or whatever you want to call them in Europe, TTF has been extremely bullish for the last couple of weeks. They've gotten some colder weather in Europe, as well as they're talking about some shortages, some storage shortfalls and things like that. So TTF is bullish, which is going against the grain of what's been going on in the United States. But even I wouldn't, to the TTF people who are thinking that this is suddenly the greatest market in the world, I'd remind them it's trading maybe $51 a megawatt hour. During its heyday in 2022, it reached a peak of almost $340 a megawatt hour. So it's a rally in a fairly depressed market is what's been going on. But that's my, and we'll talk about uranium in a little while. I think that's another interesting thing that's been going on.
Yeah, there's a lot to unpack here. Speaking of what's lighting up our tape out here, let's get out to what's dominating the volume out there today. Obviously, we're recording this on the heels of Fed Day, listeners. The Fed coming out with their decision, widely anticipated to kind of leave rates alone, but also maybe pumping the brakes on future cuts, which of course not going to go over well with the White House. So setting up for a little bit of a kerfuffle perhaps down the road on that front. So that is the environment at which we are coming to you on the show today. We'll break it down to, let's do a top 15 on the most active side today. Listen, number 15, listeners, going out to FX. It's the Canadian dollar, the March contract, 108,000 contracts on the tape there. Number 14, going out to February. In the metals, it's gold, 111,000 contracts there. Number 13, we were just talking about nat gas. The March future putting up 121,000 contracts today. Number 12, going out to rates. It's the Ultra T-Bond in March, 157,000 contracts there. Number 11, back to FX. It's the Euro 175 on the tape for the March contract as well. Number 10, to the Ags we go. It is corn, listeners, also going out to March. 221,000 contracts on the tape there. Number 9, back to energy, crude oil, our old pal WTI. Once again, out to March, about 250,000 contracts on the tape there. Number 8, back to rates, the 30-year T-bond, also hanging out in March. In fact, I think pretty much everything else with the exception of one contract, which I will mention to you. It's all March paper, listeners. 30-year T-bond, 262,000 contracts on the tape there. Number 7, 3-month SOFR, the Dees contract. Our only non-March contract left on the board here. 298,000 contracts there. Number 6, back to the Ultra 10-year, 333,000 contracts on the tape. Followed by number 5, it's the 2-year. So back to the rates we go. 375,000 contracts on the tape. Number 4, going to equities. It's the NASDAQ E-mini. Not surprising. It's a Fed day. We've seen a little vacillation in the underlying out there today, listeners. Equity markets like a little bit of whipsaw. We're getting that today. NASDAQ E-mini, 420,000 contracts on the tape. Number 3, back to rates. It's the 5-year note, 754,000 contracts on the tape. Number 2, it's the S&P E-mini, 843,000 contracts. I should note here, we have filtered out the micros for this list. If we had the micros, there would be, actually, I think the NASDAQ micro might be topping the list today, but we all know those are kind of gumming up the contract numbers a little bit. So this list is sans micros, if you're wondering where those are, listeners. And number 1, topping the list, probably no surprise to longtime listeners of this show, or indeed just watchers of the futures market. It's the 10-year, 1.1 million contracts on the tape as of the start of the show. Brett, anything catching your eye in our most actives this week, sir?
Honestly, crude oil's range trading and has been for a while now. But when it starts coming off, you start to see volume coming in. So it doesn't really surprise me that you're seeing more volume there than normal, or not significantly more, but increased volume moving down to the bottom. Feels like
we don't do a lot of Fed watching here. I mean, we talk about it. Obviously, it's inescapable here on the show. But obviously, we are recording right now during Fed Day as we speak. What are your thoughts on what we heard from the Fed, and more importantly, the market reaction? We are seeing a lot of red back on the screen, at least in the major equities right now, sir.
Well, to me, to me, it wasn't unexpected. Again, going back to what I was just saying with looking at some of the softs, inflation is not beaten by any stretch of the imagination. So it's not, and to the lower rates at this point, I think would be inflationary. And that is one of the Fed's primary goals is to keep inflation low or non-existent. So on that basis, if you look at certain commodities, yeah, they've got a point. Again, if you're looking at certain commodities that I do, it wasn't unexpected.
Let's see what's unexpected or perhaps expected as we break down what's lighting it up for the year. Remember, we were talking about this week's movers, but it is still early in the year. It's nice to see what trends are shaping up out there in the market year to date. We'll do a real quick top and bottom 5 here, listeners. Number 5 to the upside, keeping it in our consumables theme. It is corn, the March contract up nearly 8% so far this year. Number 4 and number 3, we have pretty much the same product. It's Bitcoin, the micro and the big futures up about 9.13% each. So a good year for Bitcoin. Again, feeding into that anger about ETH. Number 2, it's soybean oil. We were just talking about soybeans on the TWIFO program last week with Kevin Green. Soybean oil up 11.55% so far this year. And as we were just talking about with Brett, it's coffee so far, leading the dance to the upside year to date, up 14.3%. We just heard the numbers coming out of Starbucks this week. They weren't fantastic. Obviously, coffee going to continue to weigh on them in the future. They're going to need to figure out a way to deal with this ever escalating price of the core underlying asset of their business. You can put all the condiment bars you want. If coffee prices continue to skyrocket, it's going to be a problem for Starbucks. And then to the dark side for the year we go, listeners. Number 5, we have lithium off 4.15% so far year to date. Number 4, keeping it in dairy, it's cash-settled butter. We've been all over the place in dairy today. Cash-settled cheese, class 3 milk. Now we got cash-settled butter coming in at number 4 for the year, off nearly 5%, 4.93%. Number 3, it's Brett's favorite, it's uranium, 5.53%. Number 2 and number 1, again, we have a tie. It's the Ether Micro and the Ether Big Futures, off about 7.5%. So once again, feeding into that narrative, here's Bitcoin for the year, up nearly 10%, and ETH giving back nearly 8% for the year. So quite the dichotomy in the two leading crypto assets out there. And it's, again, adding fuel to this fire that for a long time people believed ETH was going to become the dominant force in the crypto landscape. They were looking forward to that flippening when ETH would take over from a market cap perspective to Bitcoin. These types of results make that look farther and farther away. Brett, any thoughts on what trends we're seeing year to date? And I do see popping up here to the dark side a product I know you've had your eye on for a while. You wanted to get back to, which is uranium, sir. Anything catching your eye out there as well?
Well, uranium and lithium are sort of in the same jeopardy category in my brain, in that they're both sort of the energy transition, either to nuclear power or to electric vehicles. And a lot of that has just, uranium, the wind got blown out of its sails way before, this whole thing with the AI thing that happened yesterday with DeepSeek. So lithium's been coming off as well for a while because electric vehicles aren't selling. As a matter of fact, they're just not. The infrastructure's not there, et cetera, et cetera, et cetera. So for whatever reason, both of those are coming up. As far as Bitcoin goes, so let me flip to the other side of the equation. One of the things about Bitcoin is that if you consider it kind of memey, and it is kind of memey, sorry all you Bitcoin supporters, but that's the way it trades, is that you need a new flow of fundamentals constantly coming into the market to get it to go up. And so far, since the election, we've gotten, the Trump administration is much more lax, is going to be much more lax on regulation, much more supportive of it. But that's it so far. We haven't really got any, well, what exactly does that mean? One of the things that will be coming up is, for MicroStrategy, the question of what is going to be the tax treatment of Bitcoin unrealized earnings going forward for corporations. That's a big deal. That's not getting a ton of press. So, Bitcoin, it's up, but, I'm reserving judgment on that just for the time being.
And before we roll out of the trading pit, we covered a lot of products already, Brett. We went from the ags to dairy to uranium and lithium and coffee and, of course, crypto and indeed energy. Any other products lighting up your tape you want to discuss with the listeners this week, sir?
Not really. I think that the only thing I did notice from last year is, that, gold and silver, they're up on the year, but it's interesting that the attention has shifted out of the precious metals picks to other sectors. We'll see what happens over the course of the year, but I noticed just from a press standpoint, you don't read all that much about gold anymore like you were last year. Last year it was like, every minute there was a gold story. Not anymore. The fundamentals have shifted.
Interesting. That'll make some of our regular contributors like Uncle Mike unhappy to hear the metals not getting the headlines these days. But always gets the headlines with us listeners. It's you folks. It is time for the Futures Free-For-All.
Ring the bell. It's time to take on all comers in an epic Q&A battle royale. All questions can enter, but none can leave without an answer. It's time for the Futures Free-For-All.
All right, everybody. Welcome to the Futures Free-For-All. portion of the show where you folks get to take the reins with your questions, your comments. We also shine the light back on you with our questions of the week. Brett, I want you to start mulling as well at the end of the segment. I will ask you for your pick for where you think VIX will go out at the end of the year. I'll give you a chance to participate in our 2025 VIX Crystal Ball contest. It is already closed for everyone else, but since you're joining us late in January, I'll give you a late chance. You already have almost a month under your belt, so you have a huge advantage. But I digress. Start mulling over your VIX closing price for the year as I start running down some of our questions of the week that are dividing our audience as we speak, Brett. In fact, as we're recording this, of course, I mentioned it is Fed Day out there, listeners. But if there are two tent poles to the equity markets that have been driving this broad rally that everyone's been relishing in for the better part of the last couple of years, it is, of course, the Fed and the prospect of continued rate cuts, which they, of course, just pumped the brakes on today. But the other tent pole, some might argue the stronger tent pole, is, of course, AI and how AI is underpinning everything in the market. It will become the panacea for all the ills, not just of the market, but of the society. And as a result, endless valuation creep, endless amounts of spending have to be dedicated towards the AI category. Well, of course, along comes DeepSeek, Chinese AI startup on Monday, claiming to have created a model that rivals ChatGPT for only $6 million using things like AWS and finding intelligent and very clever end runs around some of the export restrictions out there, kind of just undercutting a lot of the assumptions that have driven the market and indeed names like NVIDIA ever higher for the last few years. So that raised a lot of questions. We saw an aggressive sell-off in the market on Monday, bit of a rally yesterday, and then, of course, bit of a sell-off again today on the heels of the Fed and continued questions about the AI sector, which caused us to ask you folks, again, the ultimate arbiters of all things at the end of the day, is DeepSeek the canary in the coal mine for the end of the AI boom? Quite simply, do you think the S&P 500 will close positive on the year as a result of this news? And part two, we also asked you, do you think NVIDIA will close positive on the year? So, Brett, we're getting outside the futures realm for NVIDIA, obviously, a little bit, but I'm curious your thoughts on the broad equities and indeed the S&P 500 and the impact or perhaps lack thereof of this whole DeepSeek kerfuffle. What is your vote in our poll? You think the S&P will close positive on the year? And then B, what do you think our audience is voting for, sir?
I don't know what the audience is voting for. But I think, just based on historical price trends, I would have to say that the S&P will close higher. It's fairly rare that the S&P closes lower on the year. But let me address something with DeepSeek, because I was thinking about this yesterday. I was at a dinner party on Sunday, and there were two people talking about AI, and they're kind of in the semi-PE business. And they were talking about how they're getting involved. And these are PE people that have no connection to AI whatsoever. And I was thinking to myself, this trade's getting a little crowded when these people are talking about, setting up data warehouses and things like that, and, et cetera, et cetera, et cetera. And sure enough, the next day, DeepSeek comes along, which has to be, in my career at least, one of the fastest fundamentals to hit the market I've ever seen. So no one even heard about it on Friday, and suddenly on Monday, it's gigantic news. And I've got, given that I've celebrated my 9th birthday, I will tell you that if they did this for $5.6 million, I have some bridges to sell you. There's no way that they did it for $5.6 million. And sure enough, today you're seeing press reports indicating exactly that they fudged the numbers and, that they didn't include all sorts of things. So I'm skeptical of their accounting, and I'm skeptical of their performance gains, quite frankly. NVIDIA and the U.S. people that are developing these things aren't idiots. I'm sure that if they could be developing it a lot cheaper, they probably would be, because you sell a lot more of them, maybe. But in general, though, I don't see it as bad news. I see it as bad news possibly for NVIDIA, but I don't see it as bad news for the market in general. If AI is cheaper, it's going to be applied a lot more, and there'll be new companies entering the field. To me, this is like, capitalism at its finest. NVIDIA is making boatloads of money selling AI, and the competitors are starting to show up, doing it either better, faster, or, somewhat differently. So, I'm not concerned that suddenly, just because a competitor has arrived, that it's going to take down the market. If anything, I think it's very supportive of the market, if you believe in the whole AI narrative. So far, for me at least, the only thing I see that AI, when you try to pin down people on exactly what is AI going to do for you or do for anyone, you hear a lot of generalities, but you don't really hear very specific cases. So that's my general feeling on the market, that it's supportive. Whether the AI fundamental will last through the end of the year is an open question for me, given the amount of attention it's had. I'm virtually sure something new will strike the market before the end of the year, and people tend to put AI on the back burner or something like that. What will it be? I don't know. But I'd be surprised if it's still cooking by December 2025.
Interesting. Moving AI to the back burner. That would be an impressive trend, whatever could do that. Everyone's been so obsessed.
What's interesting? It's that, a couple of weeks ago, they came out with some news about some quantum computing, real advancements in quantum computing, and they're always fast to say it's 10 to 15 years away. But, there's two developments in technology, fusion reactors and quantum computing, that are very, very significant, if not as significant or more significant than AI ever will be. So, but yet the market focused on the quantum computing thing for about a couple of days, and then I forgot what happened. They moved on to something else pretty quick.
Yeah, we saw some impressive hyperbolic moves in some of those quantum names in a very short period of time, and then settled back down. But they are still pretty active. If you want to check out our Options Oddities program on the pro side, listeners, we talked about some crazy quantum straddles out there and the impressive movements and gains we saw in those as a result. So if you're not checking out the pro, another one to catch your attention out there. Speaking of catching our attention, our listener JMZ did that with his question this week. It's more of a request. He wrote in to say, can I request a deep dive into VIX futures on an episode of the Futures Rundown, please? Different sizes, the trading hours, etc. I think they are fascinating, but they also scare the hell out of me. Well, your wish is our command, so we could certainly pencil that in for a future episode, JMZ. We want to devote some time to it. Obviously, as you point out, it is a nuanced product. There are different sizes. The trading hours are kind of wonky. There are many nuances to VIX. The settlement alone, we could probably do about 3 hours on the VIX future settlement, a highly contentious issue. So we'll devote a good chunk of an episode coming down the road to that. What do you say, Brett? You want to raise your hand now to volunteer for our upcoming VIX futures deep dive episode, sir?
Sure. I mean, the VIX is something, being an options guy and a vol guy, the VIX is fairly close to my heart. And I think my opinion on it is that a lot of people who lose money in the VIX, it's more from misunderstanding of what exactly they're trading than anything else. It's 30-day implied volatility. And, vol doesn't go up. The only way vol goes up really is from things that come out of nowhere. Risks that are known generally don't affect the VIX that much. But things that come out of thin air, just out of right field, to continue the tortured metaphor, is, like the DeepSeek thing or wars that happen over a weekend or something. That's when you see the VIX really run. But I don't think I've ever traded anything where there's more disappointed bulls. And they're constantly thinking that, this thing is going to pop. And yet, it's fairly rare that the VIX gets over 30 or gets over 40 or any of the projections that people are hoping for. And if they do get above there, generally it calms down pretty quick. So the VIX is kind of a sleeper. Most of the time it's just sitting in a fairly tight range if things are normal. But when it senses that something's abnormal, it will pop. But the abnormality, the VIX has to convince itself that the abnormality will last longer than just a couple days. And so that's why he tends to pop and then come off, which disappoints the hell out of people. And again, I think it's just that there's a misunderstanding as to what they're trading.
Yes, those VIX pops for the bulls, unfortunately, very short-lived. Since we're talking about VIX, Brett, it is now time, sir. You get to play along in our crystal ball contest for the year. Where do you think VIX cash will close at the end of the year, December 31st, sir?
I would say I'll give you, off the top of my head, 16.5. How's that?
16.5. Interesting. Good guess. Our audience has gone about a third of them saying it was going to close north of 20. So they're looking for a rock'em sock'em year when it comes to volatility. All right. That music means we come to the end of another fun episode of the Futures Rundown. You know, I got so excited, listeners, I forgot to give you the current results of our polls out there right now in terms of what our audience is thinking for where the S&P will close as a result of all of this DeepSeek madness on the year. And we asked our audience, do you think, is DeepSeek the canary in the coal mine for the end of the AI boom? Quite simply, will the S&P 500 close positive on the year? And exactly 50% of you say no right now. 31.6% say yes. 13.2% say you don't care, you're out there slinging vol anyway. 5.3% say you're slinging crypto, so you don't care. Interesting stuff. And as a related question, we also asked about NVIDIA. Kind of a surprising, and I would say diametrically opposite answer. They're saying, we asked you, will NVIDIA close positive on the year? And 68.1% of you said yes. 31.9% saying no right now. Kind of interesting. Kind of hard to foresee a scenario where the S&P is up and NVIDIA is down aggressively on the year. But hey, that's what our audience is calling for. If you agree, if you disagree, get over there at Options right now, listeners. It'll be over there on the Twitter for you to make your voice heard in both of these highly contentious questions of the week. And Brett, before we go, if folks want to check out what you have cooking in the world of futures or anything else, where should they go? What should they do?
To the blog page at OptionMetrics, www.optionmetrics.com, or the blog page at optionstrat.com. That's where all my blogs are.
There you go. Check them out, optionstrat.com. While you're checking things out, make sure you check out our friends over there, ctsfutures.com, or just type T4 Futures and Options into Google. That'll get you a free month of their T4 Futures and Options tool, so you can kick the tires and light the fires on all these cool products we're talking about today and a whole bunch more. Speaking of a bunch more, that is going to do it for the Futures Rundown, but we're not done for the day. Nope. Back again in a little bit, exclusively for all of our folks over there on the pro side with our good buddy Dr. Vix. You like all that Vix talk we just did? We're going to go deep into the world of vol coming up on the pro Q&A session today. If you want to take part in that, head on over to the pro, theoptionsinsider.com/pro is the place to go to learn more. Back again tomorrow with the option block, and then of course very much the sister program to the Futures Rundown this week in Futures Options. Friday, of course, back again to talk vol on volatility views, and then one final time for all of our pro members, we're back to hold court on all the wild trades of the week on Options Oddities. Then we're back again next week, all the way through to another episode of the Futures Rundown. Stay safe out there, everybody.
Thank you for tuning in to the Futures Rundown, proudly sponsored by T4 Futures and Options. Experience the T4 Futures and Options trading platform with its seamless desktop and mobile applications, low latency, and professional functionality tailored for traders and brokers alike. Take advantage of T4 theoretical sheets, strategy solver, MBO, advanced charts, and much more. Empower your trading journey with T4 Futures and Options. Visit ctsfutures.com or search for T4 Futures and Options on Google to register and get a free month. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.